Good afternoon or good morning, depending where you are in the world today. We'll be starting the webinar shortly, and while we wait just for others to join, we're bang on the time to start, but we'd just like to give everybody a chance to log in. So we'll be starting the webinar shortly, and I'll be introducing all the panelists and hopefully a lively discussion on today's event on investing in Portugal whilst optimizing your income assets for the future. Good afternoon. I'm Paul Stannard. I'm your host for today, as well as chairman of Portugal Pathways, who's putting on today's webinar. It's my pleasure to guide you through today's discussion panel around the topic of managing your income, wealth, and investments in one of the world's most popular relocation and investment hotspots at the moment. And there was a recent article out this week, in fact, that said that basically Portugal has even gone up even higher in that list and is now number 2 in the world, behind Costa Rica as the favorite destination for retirees, relocators, and investors. So before I go ahead and introduce today's panel, I would like to first take a few minutes to lay out the main topics of discussion for today's webinar. First, we will be delving into the updates following last year's government state budget for 2024 and what this means to investors and stakeholders considering Portugal for investment, tax status, or relocation. We will also discuss with the expert panel Portugal's golden visa regulated investment options and how that has evolved based on those recent changes from the Portuguese government last year in terms of what things you can invest in now. And we will also touch briefly on the other cultural production visa, which offers different options in terms of investing in the country in their projects and cultural activity rather than profit-related golden visa investments. We also get insight from wealthy international investors, and we have a panelist representing some of the family offices and families on their views on Portugal and, what benefits and opportunities it offers from an investment and lifestyle perspective. In addition to this, we'll also be discussing with the panel how existing affluent expats within the NHR tax system can potentially mitigate future progressive tax rates by acting early in their NHI tax life so that their assets, investments, and income are optimized for the long term. We will also debate with the panel why Portugal continues to be hugely popular with wealthy expats and investors due to its lifestyle and culture, and along with Portugal's access, which the NHR and which the visa programs offer to the rest of Europe and the Schengen member countries. It also has a thriving property market, especially at the top end, a really good healthcare system, and it's also one of the safest places in the world. I think it's 7th in the world on the index for safety and security, as well as its reputation for friendliness, a fantastic climate, and not forgetting those 300 days of sunshine that everyone enjoys in Portugal. So also, the final topic of discussion our expert panel will delve into will be Portugal's tax regimes and the investment opportunities and how they compare with perhaps other jurisdictions in terms of investment opportunities, lifestyle, relocation, etc. So enough of me. Let's get started. I'd like to start to introduce you to some of the panelists. We've got David Vicani, who we're very pleased to have, who's the chairman of Federation of European Independent Financial Advisors, FIFA, and also CEO of Portugal-based, CEO and founder of Portugal-based Beacon Wealth Management. David brings over 25 years of experience in cross-border financial planning and structuring expertise, and really has a lot of experience in supporting NHR tax advisors and people looking to invest. Joining David is Chris Marson, who I know knows David and works with him on a lot of projects. He's also CEO and director of RTA Family Office, with over 30 years of experience in managing significant wealth for ultra high net worth international families. Chris possesses expert insight into private equity, wealth management, real estate, technology, and cross-border tax and financial planning, as well as a deep understanding of what wealthy families are looking for in terms of international investments, such as golden visas, property, etc. In addition to Chris and David, we also have Luis Quasmara, who is the co-founder and partner of Iberis Capital. Luis has extensive experience in regulated funds in Portugal, as well as venture capital experience spanning over 15 years. It makes him an ideal panelist for today's event, and an expert panelist for navigating Portugal's investment landscape, especially around golden visas, which I'm sure he'll be able to talk about in more detail. And finally, we have Marcus Balacelos, who is the founder and partner of Evino Capital. I think it says it in the name. There's obviously wine involved in there somewhere. Marcus has over 20 years of experience in business development and corporate finance, and has been heading up the company's own golden visa program in Portugal, specifically dedicated to projects focused on the eco and wine tourism sector that everyone loves and enjoys in Portugal. Our panelists today bring a wealth of experience in international cross-border tax and financial planning, and it's a delight to have them today. And we have a great deal of experience on the panel to talk about investing and planning in Portugal. So just a quick note for everyone watching, today's webinar is being recorded. So if anybody that registered hasn't managed to get on, we will be sending out a watchback email link after this event and tomorrow, and sharing it with everybody. So if everybody can't stay on to the very end, there is a chance to watch it back afterwards. We're very pleased. We've had over 400 people registered for today's event, which means that we're going to have a busy session, I'm sure, in the question and answers part at the end. So a note to the audience, don't forget in the little corner in green there to put your chat questions. If you have any questions specific to the panelists, we will try and get through as many questions as we can, but don't worry if not everything gets answered today. We want to keep it pretty well on time for the hour, just to make sure we're efficient with everyone's time. We will go back on all of the questions to all the recipients after the event. Now, over the last few weeks, since we got into 2024, there's been a lot of back and forth changes, specifically around anyone wanting to join the NHR tax regime, which closed to new entrants at the end of December. And there are a number of grandfathering last-minute changes that the government threw in. So there may be a few people on here that may have some questions around that. So we can discuss that a little bit. But it's investment specifically and planning that we're talking about today. So there'll be also be discussing the fact that the Golden Visa program, which has been around and becoming stronger and stronger for investors in Portugal, and there's been some changes around that, which means there's been a bit more regulation, which means there's more security, and there's many new opportunities coming through that program. So the panel will be able to talk about that. And as I said earlier, we have seen record growth in the property market in Portugal last year, and I think we're going to see steady growth again based on a recent report that was out at the end of the year. So I'd like to start by asking one of our panelists, David, could you just give us some insight and experience into Portugal? I know you moved from the UK via France and then ended up in Portugal and set up your business there. So you've got real life experience. You went through NHR, you know a lot about the funds. Can you give us some insight into what sort of support wealthy expats need, and the main thing that your team tend to advise people on when investing or structuring things in Portugal?
Okay, thanks, Paul, and good afternoon, everybody. It's the 300 days of sunshine is being sorely tested today because it's absolutely tipping down outside. But nonetheless, the weather's always generally very wonderful. Thanks for that, Paul, again. And yeah, look, Portugal has been it's very dear to me and my family, and we've been here a number of years now, living here, had worked here for many years, and also visited on many occasions, probably for like 25 years or more, for holidays and the like. And lots of just sort of lovely things about the place, wonderful people, wonderful country. But a lot of people have been moving down here for many years, well before even the existence of NHR. And NHR was then sort of obviously to a lot of people an added benefit, and to allow people to sort of benefit from their tax status or make good investments, whether that's via Golden Visa funds or other types of investments or into property and the like. So what we've been doing over a number of years down here is working for people, particularly those, should we say, in NHR or who have just been moving into NHR, to ensure that they structure their financial affairs and financial plans in a proper way. Obviously, what works in Ireland, what works in the UK, works in the US, Australia, Canada, doesn't necessarily work the same in Western Europe and Portugal. There are different types of investments that work well, and different sort of tax environments for people to benefit on. And being from the UK, obviously, there are things like ISA investments and other type of things, which, whilst all fine in the UK, just don't work very well or work at all in places like Portugal, also France, Spain, and other areas like that. So fundamentally, what we do at Beacon is to help our clients structure themselves properly and efficiently. So I always say it to people on inverted commas, so that they think Portuguese. They live in Portugal, they're tax resident in Portugal, they pay tax in Portugal, and it's important that they, as I say, think Portuguese and create investment structures and planning that is compliant in Portugal and works within the Portuguese tax system. There are some very good ideas around that, with quite a degree of flexibility and great ideas for income. So really, and then obviously there's the issue of pensions as well, which is a whole other subject as well. But really, the main aim is to assist people to be, as I say, in inverted commas, to be Portuguese. You know, that's where you are. That's where you're paying your taxes. That's where you're living. Let's get you set up properly so that you are efficient and can benefit from that. So it's taking a view, long-term view, and getting people properly sorted out.
Okay, Derek, and we recently conducted a survey with about 1,000 wealthy expats, and would it be fair to say, because our surveys showed that just 27% of people boldly go into NHR, but actually then plan for beyond NHR within that first 7 years? Is that a common thing that you've seen, and what the impacts of not planning for the long term?
The impacts of not planning are quite significant, because if you do not structure yourself in a proper way, after the year 10 under NHR, your tax bill could go significantly increase unless you set yourself up properly within your period when you move to Portugal, or when you say within the NHR. So say you're in NHR now, you should be thinking about year 11 already, or I often call it year 10 and 11. And that's very important for people. So it needs to be, so, you know, currently if you're NHR, you may be paying 0% or 10% tax on your pension fund, which is obviously super, but you do need to be thinking for just after NHR, because you do not want to be paying progressive rates of tax. So it's very much a matter of structuring, organizing your affairs so that you can then benefit from some of the sort of tax regimes. We took a client recently who's only got a couple of years to go in his non-habitual residency situation, and went off to meet his accountants, who are Portuguese, along the Algarve here, and they very much encouraged him to do, shall we say, to do what we'd said. It's very much get himself organized so that he can continue to enjoy his life in Portugal, and he didn't want to have to clear off to somewhere else in the planet to suddenly make a new load of friends and join 2 new golf clubs. So it was very much that type of thing. So it's getting people, or helping people get organized so that they will pay sort of very sensible rates of tax afterwards. And there are certain investment types and vehicles which we can cover obviously in due course, which facilitate that for individuals. But no, it's not common, and I'm not surprised by that 27% figure. I think people. But hopefully, with a degree of sort of assistance and education, we can make people more aware of what they need to do.
Yeah, thank you, David. And Chris, have you got any other context? Obviously, from an investor's point of view, yeah, I know I've had conversations with a number of existing NHR people who didn't realise, and they got to year 8, and if they'd have acted on year 2 or 3, they could have saved themselves a significant amount of money on their capital when it got to year 11.
Yeah, I think when you're looking at NHR, you know, I mean that's the tax driving people to move there, and you do, if tax is a big driver for you, then what you're clearly, the earlier you plan, the better. That's all I can say. I mean, yeah, the people we deal with, wealthy families, you know, I have to be honest, they can live anywhere in the world. You know, they can choose where they live. They can domicile or tax residence themselves pretty much anywhere. One of the reasons they choose Portugal is because it's a beautiful country. You know, it's got great healthcare, it's got great schools. It's in the Schengen region. So if you get, you know, once you get your residency, you can, you know, move around Europe freely. I think having choice is an amazing thing, and more wealthy people are choosing Portugal, and not just one part of Portugal. They're looking all around. You know, I think we're seeing, you know, people up near Lisbon, we're seeing people in the Algarve, with people in Porto, Madeira, lots of areas that our families are looking at. And I think, you know, if you're looking on the investment side of things, there are many interesting investments in Portugal other than real estate. You know, let's look at it, but you're not limited to that. You know, it's worldwide that you can invest. You don't need to be just sitting in cash or sitting in property. You know, there's many options you have, I think.
Yeah, I think, you know, all of those points, both Chris and David. So what I'm hearing is early planning, making sure you know, you're looking at the options that are right for you in terms of structuring, whether it's NHR or investments. But I think, you know, it's so true. You know, people come for the lifestyle, you know, and golden visas, you know, are obviously part of that. So I'd like to go to you, Louise. Last year, we saw some changes to the golden visa program, as well as the tax regimes we've been talking about. Can you share with the audience what you're seeing now in terms of the golden visa funds and opportunities going forward into 2024 and beyond?
Yeah, sure. Well, just let me start by saying that I'm the resident Portuguese here on the webinar. Right? I was born here in Lisbon, although I left after college, and I came back in 2007, and I've been living here since then. And as someone that has returned, I can understand the attractiveness of coming back to the country. It's a really pleasant country to live in, actually. On your question of the golden visa regime, I think that starting from the end, I think we are arriving at the place where we have a robust framework which allow people security and visibility to invest. There's been an evolution, and I'll probably go quickly through it, but I think it's finally arrived at with us. The regime, so meaning that's the official name is residency by investment regime. It started in the late 2000s, and it was mostly real estate focused, and the concept was that you would get a residency permit if you would bring money into the country. This coming back from the time that the country was cash strapped after the crisis of the global financial crisis, right? So this has been an immensely successful program which has evolved and became more structured and transparent over time. So in 2018, additional options to invest were added. So the standard prior option was doing a direct real estate investment. You could also do a direct investment, creating a company and creating jobs, or doing a directly cultural investment. In 2018, the option to invest indirectly through a fund, either venture capital or private equity, is allowed, as long as the fund focuses its investment in Portugal, meaning that it invests more than 60% of its assets in Portugal. Okay, so from then to now, what has evolved is that there was tremendous informality around the real estate part of the program, combined with the fact that there was tremendous pressure on the real estate market from all this money coming in. So gradually, the law started restricting the real estate investment option. First, as a direct investment within premium areas such as the coastal areas of Lisbon and Porto, but then people were doing it indirectly through funds. And finally, last year there was a full clarification of the law, where now if you want to go you can either do a direct investment, would be more intensive from a perspective of either founding a company or doing some cultural development, or if you want to go for an indirect investment, it would be a venture capital or private equity fund. And moreover, I think that it's important now that the process itself wasn't working very well too, because as there was a big glut of inbound applicants over the last 2 years, and with some changes to the National Immigration Office, which is the famous CEF, which was extinguished, there was a glut in applications. And so the last law actually reschedule the program. So now you start counting from your application date up to the final date. So that glut has in practice been resolved. And this is going to be ratified by the president over the next few days. So I think finally we have a really stable framework, which allows people the safety to say, okay, I can do transparent indirect investments. If I'm very fan of a specific area, then I'll do a specific investment in this specific area that I know very well. The time frame is well known. It's absolutely non-retroactive. That would be unconstitutional. That was one of the questions in the chat stream. It cannot be retroactive. It's unconstitutional. But the law, it was very clarified to say that is also not the case. And now people can focus on what's their preferred investment. Is it attractive? Is it not attractive? Within a robust framework. And I think that's really, really positive to my mind.
And the other thing, would it be fair to say, obviously we're seeing, a better program, more diversified, and it's much more transparent now, these approved regulated funds?
We believe so. We are SEC regulated. The SEC is called the CMVM here. And what we see is the emergence of not a golden visas fund per se, but investment funds which are normal investment funds, which have the normal return that need to attract investors anyway, and that a chunk of those investors actually use the investment to apply for the golden visa. So around 20 to 25% of our investors actually use the investment to apply for the golden visa, which honors us. But we have 85% of investors which have no such incentive, and that they must give the returns as an appropriate investor that they could be doing anywhere else in the world. And I think that's a very transparent and easy option, so to say.
Yeah, and so and they've only got to say a small period of time a year in the country, and their whole family can benefit, and they can, as I understand, invest. They don't have to invest in one program. They could spread their risk over 2 or 3 different opportunities.
Yeah,
so for instance,
absolutely. The way it works is someone needs to apply for the golden visa program. Someone in the family needs to apply for the golden visa program, and people can select several providers of investment. They can diversify. They just need to get to the limits, which is the minimum, which is the 500,000 euros, which is the lowest limit. And then the family can join to another program, which is the family reunification program, so that there's one person doing the investment, and then all dependents, meaning spouses, dependent children, and dependent parents can join within the same investment. And it's very common that we have one of our investors that is partly investing with us, and it's partly investing with someone else. That's very usual.
Yeah, I mean, I saw a stat yesterday in America alone, just shows, what a changing world we're in. 32,000 Americans are thinking of relocating already in 2024, even before we've got into the madness of their election. And then you've got similar things in Hong Kong and Israel and parts of Europe, UK, Canada. And the golden visa does give people, that security and the opportunity to have all the benefits that Europe, the Schengen region can offer, but still having, a link to home and, where you want to be, Marcus, just following on from Louise, can you give your perspective on investing in Portugal and what you and your organisation is seeing and acting on in terms of golden visa investments, and any other advice? I know your particular one is very much, there's different ones. Obviously, you could invest in companies. Yours is particularly linked around a particular sector in terms of the vineyards and what have you. Just be good to hear, your take.
Well, Paul, thank you for the question, and good afternoon, everyone. Before I jump into the questions made, I agree 100% with Luis about the future of Golden Visa. It's bright, and I believe it's much better than the past, especially the last years of real estate. What we have witnessed, and this is part of the answer, is that a lot of the investment has shifted into this new era, leaving behind the real estate and now focusing on the, let's say, the more sustainable income generation type of investments. And ourselves, as Invino Group, our organization is very, very aligned with this trend, because since the beginning, since 2018, we've been dealing with this market. We've been investing in the growth of the Portuguese economy, and focus on this particular sector that we believe there is ample room for developing in the country. And in our perspective, for those huge numbers of people, you mentioned the Canadians, the Americans, but also the Brazilians, willing to invest in the program 2024. Our piece of advice, it's really work closely to your advisor, maybe the wealth, the financial, or the Golden Visa advisor, because there are a lot of brokers and people that understands the law, so they can provide you very good insights about how you can apply, how the rules are now in the new situation, the new era, how the rules are linked to your family and to your decision of global mobility, for instance. And of course, including this analysis that Luis was explaining, when you compare, when you want to diversify your investment, you need to make sure that you compare the different types of funds and the different types of investment. And I would say one point it's important to raise is to make sure that this investment strategy is linked to the Portuguese economy. It's one of the points. The second point is to understand the track record of the management team. Of course, the third one, maybe sometimes the first one, are the returns of the fund, the returns of this investment that you are making. Make sure that you understand there is transparency behind it. It's not only income, but make sure that there is a specific KPI, financial KPI, to inform exactly what you are going to make or expected to make. And of course, some of the funds are already offering other benefits, not only the Golden Visa, but some other benefits for investors to attract them.
I'm sure wine must be part of that attraction with your particular opportunity. I mean, I'd just like to say, I agree with what the panelists have said. You've got to get advice. We've looked at nearly 30 different approved Golden Visa investments, and through our team we can put you in touch with advisors or Golden Visa principals like the ones we've got on the call today. But there's a rich opportunity, and I'd just like to get from you, Chris, from an investor's perspective, because obviously a lot of our audience are on there to learn, about the investors. What's your view from an investor's side of things?
On Portugal in general, or just on investment?
On Portugal and Golden Visas. What are the two or three things that you would have done, or what you've looked at and what you've seen?
It's an interesting process, if I'm honest. I mean, when we work with our families, and we don't work with hundreds, we only work with a few super wealthy families on the family office side. I think what they look for in investments is, as has been said by previous panelists, is something that will add to the the GDP of Portugal, will add to the Portuguese economy. What they've looked at, there are, investing into various areas beyond real estate, things, setting up companies, setting up training programs, setting up, even hospitality businesses. Our people have looked at lots of different areas, and the driver is not always to get the golden visa. The driver is sometimes, what they want to do is to do good. That's what kind of families like to do. They like to be philanthropic, and they like to in their eyes, do good and get their, make their wealth work for them in a way that best works for the country they live in. I think on the golden visa things, there are lots of, there are some very, very good funds out there that you can use that will qualify. There are plenty. I mean, we see a lot of private equity and venture capital projects coming across our desk. Probably too many, if I'm honest. Trying to keep on top of them all and decide which ones are good and which aren't is a tough one. But what we definitely do get, I think, is a multitude of different areas. I wouldn't say there's one area that predominates. Equally, I think the other part of it to say, I guess, is there's still real estate. If you're outside golden visa, there are still real estate investments out there. I think people have looked at those and kind of, we saw what the government think of them through golden visa areas, but equally there are still areas of Portugal that some stunning developments can be made.
Yeah, no, I agree. I've seen one or two of these in recent weeks. Some phenomenal new things coming on stream. I mean, and the other thing worth mentioning, you talked about impact there, and the other guys, the golden visas are for profit, but obviously they give you all these other access elements, and obviously we all know for profit means they can go up or they can go down. But there's also the cultural production visa as well, where you can invest in projects. They're not for profit in the main. They're just basically doing, as you said, philanthropic things, and give you some of the, if not all of the same benefits of the for-profit ones.
No,
so there's
exactly
a lot
right.
of opportunities out there. I'd like to switch track now, because I notice we are getting through the time rapidly, and I'd just like to switch back to David, really. Obviously, the last quarter of last year, we saw a mad scramble where lots of wealthy families who had perhaps been planning it for a year or two, but thought they had more time, suddenly had to overnight change everything that they had. They might have, put a deposit on land and suddenly had to go and get NHR tax status. Are we basically seeing the end of the passive income side for new entrants, or do you think it's going to evolve? What's your view on that side of it?
I think obviously these things are evolving, and we've got people who this year have obviously had applied and got their foot in the door earlier. We've got sort of the new NHR, let's call it light, coming on stream, and I think that is different, but it's still an interesting sort of way of structuring yourself and getting yourself to Portugal's trying to attract smart people, as it always strikes me, as well as as a very sort of thriving tech business here in Portugal. I lived in down south, but every time I go to Lisbon or I drive around Lisbon and go towards Cascais, there seems to be more and more tech businesses there, and it's a well-educated workforce with very smart people. But obviously that needs to keep going. And I think the new ideas that the government have come out for now that everything has settled down a little bit will continue to do that and still make it attractive for people. The other thing to say, to some extent, is that Portugal, regardless of tax benefits of NHR or whatever, or the NHR light coming in or whatever, basically there's proper ways of structuring your pensions and investments, that if you do it properly anyway, it's still a really smart place to be, and you can structure your income in such a way that you're not paying onerous amounts of tax. So it's actually it's one of those things, get yourself sorted out. It might be different, but it's change is inevitable in these things. And a lot of really good, a lot of people live down in Port here prior to NHR in the first instance. So yeah, things are moving on. I think that will continue to be encouraged. I suspect that Luis and Marcos might maybe have more of an opinion on that than me. But basically, with all of these things, it was a great country to live in before NHR. It was a great country to live in during NHR, and I suspect it will still be a great country after NHR. And there's lots of things you can do to make it not just enjoyable, but actually to structure yourself properly.
Yeah, I mean, there was many people in their tens of thousands were coming before NHR, so and the country is in a much better place, significantly better place than it was, Louise, back in 2009. That would be fair to say, wouldn't it?
Oh, that would be fair to say. It's a nice place to be in anyway, because I came back 2007, but it's developed very, very nicely over the last 10 years, I think. And I am myself. It's a pity that I myself cannot have NHR resident status because I'm Portuguese.
Yeah.
I'm sure people will enjoy the program, and I hope the program can continue in some way.
Yeah, I mean, I have to say that there will be other things that I mean, there's the D2 entrepreneurs visa, which offers a lot of similar benefits to entrepreneurs that are opening up a business, similar to what Golden Visa does. There's the D8 visa for digital nomads, so bringing that talent in again. And obviously the D7, at the end of the day, a lot of people come there to retire, but, more and more people are coming much younger, and they're still running their businesses, but because you can run them more remotely, they're setting up entities in the country, and that's got to be good for the economy, and it's got to be good for the people involved and the investors. So I've just, I'm going to jump a bit further ahead now, really, and just talk a little bit more about this side of things in terms of the safety and security element. Chris, obviously, we've got two guys on from you representing the Gold Visa Investments, but safety and security are a big thing for people, aren't they?
For wealthy families, Paul, they are the only thing.
Yeah.
Security, safety, confidentiality, all of those things are very, very, very important. And that's one of the big pulls of Portugal. It's a safe, secure country, part of the EU. Its crime rates are low. It really is an attractive place for people to move to. Yeah,
and it's got beautiful countryside, coastlines. Silver Coast has come up enormously in recent times. So there's a lot going on there. And the other thing we've been seeing, obviously, a lot of US people are coming that basically already had the long arm of the US tax system, and they're not, they're still coming in their droves. So obviously they're coming for a lot of what you just said, really: safety, security, healthcare. I was on a call with a lady the other day who's moved from the US, and she was paying 7-fold more for a private healthcare in the US and with less benefit.
That doesn't surprise me.
So yeah.
I'm not a tax consultant, but just because US citizens are especially cumbersome from a tax perspective, you should be aware that if you're a tax non-resident here, it's just going to be the US. It's going to be the Portuguese framework. It's going to be fully transparent for you. So that's the fact that you're not extra cumbersome here. That's a point.
Yeah. So I would like to now go back to you, Luis, just and start to drill down a bit more on how the Golden Visa program has evolved, and if you perhaps tell us a little bit about your own particular opportunity and what that looks like.
Okay, so well, the way the Golden Visa program evolved, and it also evolved in terms of applicants from a program where you came here and you bought something that was basically the investment, and it was basically a piece of property with a certain type of investors, and then additional options came up. Specifically in 2018, the fund options came up. Then there were other options that also came up for people with specific interests. So that has been following up. So there's an option to support R&D. There's an option to acquire a company. We've talked about the cultural support option, urban renovation, and then indirect investments. So I think that today, bar real estate, all these options are valid and very welcomed by the country. And I think also it's important to say it's not complicated to apply for the golden visa. So if you do one of the funds, which is the one I know better, it's pretty direct. But if you don't do any of the other ones, the documentation is not excessively complicated. So I believe that the program evolved really from a program where, okay, I want to go there and get a residency permit, to a program where I'm interested in the country. I have a connection to the country. That's a little bit what needs to be demonstrated. And as long as I fairly demonstrate that, then I'll get the residency, which is a much nicer setup, honestly. So this is a little bit where we are right now. If we want to speak about the options to invest in a fund, which is what we do. So we manage funds, and people can use our funds as an eligible investment. Then I basically have to say that I agree a lot with what Marco and Chris said. Basically, the question is, which funds should you select based on the track record, based on the integrity of the management team, based on return that you're expecting to do? And secondly, what are the investment theses? What are the investments that work in the country? Okay, and there's where I can give you a couple of reasons why it's a good idea, or we think we can make better than average returns in this specific country. And maybe starting with this has been mentioned before. Portugal has become a tech hub. If you come around Lisbon, there's a tribe of technology companies, especially software companies, which can be based here locally but address global markets, so are not constraints in terms of things to grow. And they are actually a very interesting investment target. This is pretty structural because these companies are fed by people, and the people that come to these companies are not only the majors from local faculties, and it's no coincidence that the education services in Portugal has been booming. So 2/3 of the finance university here are foreign students coming in, ditto for engineering, etc., etc., etc. And the non-habitual residence program itself and the entrepreneurial program itself brought a lot of people coming here to a very pleasant place to live. So what we have here is a very concentrated cluster of very talented people, which can address a global market. So it's a very good place to invest. Okay, so and that's been a very interesting investment team. If you're focused here, you know the ecosystem, you know where they come, you should be able to do comparatively better returns than if you are, say, investing out of northern Siberia, for instance. It's hard to do it there. Okay. Yeah. So that's one possible investment team. Another investment team, and it also goes around that you need to select areas of investment which have the potential to scale up. There's a large number of companies in Portugal which are export-driven companies, which are mid-market export-driven companies, And basically they enjoy a stable regulatory framework, they enjoy good infrastructure, and they do export globally, so they address global markets. But many of these companies were created just after the country joined the EU in the late 80s. And now they're at the point where most of those owners are retiring. So we have an absolutely above average number of succession issues in Portugal. And we have companies which are more businesses founded by entrepreneurs than companies that were built by professional managers. So migrating professional management company into these companies which have an opportunity to buy because there's a succession issue, it's also usually a very interesting investment thesis. And I guess that the last point that I would add is that this is a very niche market. So if you go to the next country, which would be Spain, and compare the volume of capital which is chasing companies. So if we compare it proportionally, there would be around 5 times more capital chasing each company of comparable size in Spain versus Portugal. So this still seemingly uncompeted nature of the market is very interesting, especially if you get a company which is Portugal size, grow it to an Iberian size, and then you sell it on to a Spanish fund. That's a very direct way to make money. This to say so that when you're in the market, when you're local, when you're focused, there are a number of very interesting investment opportunities that where you can make good returns. There's no magic fund, but if you have the infrastructure and the system to do it, you are able to deliver, and you're able to show the numbers that you've delivered it. So I guess this has examples of what you were asking.
Thank you, Luis. I mean, I know because we've analysed 30 different funds, but there are funds out there where you can invest partly in listed stock to startups. Obviously, you've got funds like Marcus's. It's much more diverse, but as you say, it's becoming a much stronger environment, and I'd like to just bring Marcus in just to get his input and give us a little bit of insight into his own particular opportunity.
Sorry, my phone was mute. But yeah, thank you, Paul. Our fund, actually, we are fund advisors. Stag is the fund manager. Our fund, the Invino Fund, is a very special one, I would say. And the reason why is because we invest in companies in Portugal with the concept of transforming the piece of land, the working farms and heritage sites, for instance, with the vineyards, as Paul was saying, it's a very sexy market, talking about wine, hospitality. So we are in this specific sector. So the heritage sites with vineyards, olive groves, cork forest, we transform this into a sustainable resort. So there is a very important side of hospitality on the business. And at the end, what we want to offer, it's a full eco wine based experience to the guests. And this has a lot to do with Portugal. This is the Portuguese type of market: tourism, wine, eco, and wine tourism as well. As this is almost the same, but it's important to highlight this is a very competitive market for Portugal. And what we expect that when we invest in Vino Fund, we have highly competitive returns. And of course, not only the returns itself, you're investing in countryside, you're doing good, a sustainable type of investment. And at the end, you can also access some very exclusive benefits of the Invino Fund Investors Club. And it's eligible for the Golden Visa. So it's a nice piece of investment that you can work together with others to facilitate your process with Golden Visa.
Perfect. Thank you, Marcus. And I'm sure it will resonate with much of our audience. I'm conscious that we're getting a lot of, we've got a very busy event, and obviously there was a lot discussed there, but I'm conscious we now need to start getting to the questions and answer session. So I'd just like to ask the panel, some questions that are coming in. We've had a question in from Mandy Evans. What is the balance of risk when investing or moving your tax status to Portugal? Louise, I don't know whether you want to take this one first, or maybe David. Start with you, Louise.
Yeah. Well, it's an option, okay? That's the first, and I think you need to be adequately advised because it mostly depends on your home country. You can either move your tax status to Portugal, and then under the Portuguese tax regime, you need to be adequately advised to have an efficient structure for your investments, and it works. I'm a Portuguese tax resident. Or you can say this is too complicated and I'm keeping my own original tax structure. That works too. But my recommendation is, within this flexibility, go to an advisor that will help you, depending specific on your financial situation and your original country.
Okay, thank you for that. Chris or David, anything you want to add to that, or?
Probably the answer is you should never move anywhere for tax unless you absolutely have to. But you should, and you should actually move to a country because you want to live there and it offers other things. Every piece of whether someone moves to Portugal, which we're talking about, or they want to move to France, they want to move to Spain, they want to move to wherever. Yeah, there are tax planning opportunities, or to structure your affairs properly, using good managers who've got good funds. So if you're coming in under Golden Visa, looking at the funds like the guys have here and others, if you want to come in that way. But the main thing is you come in for the right reasons. Going back, harking on to what we sort of said at the beginning of this, is very much look at, if you go take it in reverse, you can move back to the UK. If you start going to the UK, you set up your ISA planning, you do your pension planning, you do your other types of investments, your general investment accounts. If all of that thing, that's different in Portugal, it's different in other jurisdictions. So it's very much when you get to the country that you're moving to, or you get your application in, your visas, is to set yourself up and start to plan in such a way, as I said earlier on, you need to, if you're moving to Portugal, you need to think Portuguese. Don't think as an expat, because that's where you are tax resident, and that sort of thing. So very much think about the planning, and that's it. But as I say, go back to, don't move anywhere because it's for tax reasons. Move there because you want to live there.
Thank you, David. Chris, I've got another question in from Andreas, who's asking, with the focus shifting away from real estate for golden visas, what alternative investments do you see holding the most potential for foreign investors, or considering both the economic returns and the visa benefits?
Cool. Wow, you're asking me to have a crystal ball there, Paul, aren't you?
No, well, it wasn't my question, Chris. I'm just taking it from the chat.
I think when you're investing, you need to, your risk profiling is really important. You need to understand what your goals are. You need to recognize, what are the areas, do you have areas of interest that you want to invest in? Are there any particular areas you want to avoid? So for me to say what's going to be the next big thing is a tough one. But I think if you look at markets in general and you're investing for the long term, don't be in cash is the answer. Keep cash for your kind of rainy day money, but long term, you need to be looking at funds that will, participate in stock market growth, in some alternative fund growth. You know, a structured portfolio covers many different areas. You know, you'd probably run a core satellite approach. You know, I like, you know, so I like the idea of investing in vineyards. I think it's a great idea. You know, it's not only is it green, it gets you know you're producing a product that people will want at some point, I'm hoping. But there is definitely, you know, there will be areas, if you've got a 5 to 10 year time horizon, which you should always be looking at when you're investing. You know, your money will grow quicker in the market than out the market. Don't try and be clever. That's my other maxim is, you know, you won't be able to time the market no matter how good you think you are. I think there's some stat out there that says, we always talk to our families about that, if you miss the 10 best days, if you'd missed the 10 best days in the stock market in the last 50 years, then you kind of halve your actual performance. So, you know, there's a very big thing. So to pick on one particular area, I would struggle with, and I think individually, each individual client or family are different because they have their own areas that they want to look at. But what I would say is talk to a specialist advisor, plan properly, and, you know, make sure that it's aligned with your values. That's the key bit.
Yeah, and diversify. You know, if you're not sure, if you spread that across a number of funds, then, you know, you'll get balancing risk, I suppose, as well.
Yeah, definitely. You know, diversify across asset classes, diversify across fund managers. All of those things are important. You know, no one person has the answer to everything. I'm a firm believer when talking about investment and asset managers. You know, I'm never convinced that they know that BP is better than Shell, or, you know, Louis LVMH is better than you know, another luxury goods manufacturer. But, you know, what you actually need is a diversification of different kind of views and styles, and not just kind of get stuck into one. So yeah, diversification is very important.
I've just got another one in from Alan Richards, and just briefly, if you could do this succinctly, because I'm conscious I want to get through as many of these questions before we close out. So Louise and Marcus, Alan Richards has asked, can you just give us a little bit of info? So give us your elevator on your regulated golden visa options, and just, you know, just give us a headline, really, if possible.
Marcus, or I'll go first. Marcus is still muted there.
Okay. Yeah. All right. Go ahead.
Okay. My one elevator pitch is, this is a regulated fund. We are investing in Portuguese mid-market companies which have the potential to grow globally. We've been doing that for the last 5 to 6 years and doubling our money within that period. It's very easy because it's just buying them. It's not a very competitive market. We improve management, we grow them, and we then sell them on a liquid market. And we do this systematically, and we've been doing the returns. So it's a very simple, good return product, not complex. So that's us.
Very good. Marcus?
It's a very
Well, I would say the main highlights in our particular fund, it's the approach of very specific market, let's say, established in Portugal. We've been there since 2017-18, working with the eco and wine tourism sector. It's a unique sector. You're just not talking about wine, but we are talking about luxury, hospitality, and agroforest. So there is a very important component of agroforest and sustainability there. So what we mean, and we're not only looking at specific sites, countryside, but we're also looking at delivering returns on top of that. So our main approach is to bind the hospitality experience with the wine and the eco preservation of the local forest and local environment. So join us.
Yeah, well, they can all get in touch directly, and we can make introductions to both Louise and Marcus post this event. No problem. So I just want to start whizzing through these questions now. David, we have a Peter Sandals who's asking us to perhaps you could give the key factors that people should take into account in terms of this sort of planning and structuring things once you're on NHR, not to get caught out, you know, as this 10-year tax period starts to run down. Are there one or two things that you could point out for David, for Peter? Sorry.
Yeah, I think basically, and go back to what we've been saying earlier on, and the other guy's been saying about planning, and get planning as early as you can. There are significant benefits in using let's call it insurance-based wrappers in Portugal, and when you want to take income out, where you get particularly better tax rates on the amount that you withdraw from that money. You are only taxed on the profit element of the piece that you take out as income, as opposed to being taxed on the whole piece. So rather than being taxed at, shall we say, 28% or even 35%, if you have money in a jurisdiction, shall we say, like Jersey, Isle of Man, something like that, rather than being taxed at 28%, you're taxed at the profit element on the amount that you take out. So actually that is significantly less. We do have some case studies on those types of things if people want to avail themselves of that. So it's quite good studies onto the effects
so
of
you're paying a small percentage on the capital growth element, not the coring.
You pay the same amount, but you actually pay only on the growth element, not on the whole sum, and that's very different. That's obviously a very different figure.
So it's sort of like a 15% of 15% type thing. Or
yeah, it can be. That's right. But let's say if any of people out there want to have some information or some case studies, we've written them up, and we've got some very good data there that can assist someone in their thoughts.
Okay. Well, if any of the audience want to reach out to the panel, obviously they can get in touch with us at Portugal Pathways, and we can facilitate those introductions. We've got a question in here from a US lady, Linda Murphy. She's asking, should we move our tax status away from the US and become a permanent taxpayer in Portugal? And what are the things to consider on the basis that the person has significant wealth but wants to get out of a very insecure US and political situation, so and have access to all of those wonderful European Schengen region countries. Chris, did you want to put a little context to that one?
Another great question for me, Paul. Cheers. I think with the US, to get out of the US tax net is really very, very hard. You'll always be a US taxpayer if you're what's called a US connected person, and you need to not become a US connected person is very difficult. And to cover it on this call, we'll be here till kind of 6:30, I would think, tonight. But what I would say is reach out, and there we do have US people within our teams, and certainly within my team we do that we can use. But you need to be very, very careful how you plan if you're a US connected person, because you could end up being double taxed. You could end up being in structures and funds that cause you real problems. So it's very, very important to get, before you do anything, is to get with a US tax advisor, a US qualified advisor, and someone that could sit down and actually point you in the right direction of where to go, because it really is a minefield. You can end up paying taxes above 70%.
So, Chris, would that be a US tax advisor and a Portuguese tax advisor? You
would need someone familiar with both jurisdictions, and you'd also need a qualified US and Portuguese financial advisor, which we do have. We have access to. So please reach out. Was it Linda you said did this?
Linda Murphy, yeah.
Well,
we can connect with Linda and make those. And then would you need someone like David to come in behind that on the structure thing once you understood the mechanics? Is that the?
Well, I would use your financial planner / financial advisor right from the very beginning.
Right. Okay.
I would have them work together with the tax advisors and go from there. That's what we do with our families. We hold their hands right from the very beginning, because otherwise you end up explaining things 3 or 4 times. Yeah,
understood. So, Louise, we've got a question here from Stephen asking, the new Golden Visa framework has a focus on PE / venture capital funds with a Portuguese focus. From a risk return perspective, is this an attractive option for potential investors? What do you think about that?
Well, these being a less competitive market, and niche market than, say, global European private equity, historically, the best managers here have had better returns than the average in Europe. There's a number of investors we have from Central Europe which invest in us exactly to get a little bit of that extra. So you can get good return options here with the opportunities that exist in the country. Again, remember, what that means in practice is that the fund needs to apply 60% of its capital at least within the country, and you can get those options. So you should review the alternatives that you have and choose the ones that you like most and that have demonstrated that they have good quality, basically.
Perfect.
And they exist.
Well, I'm just going to take 2 more questions because I'm conscious we've gone over our time limit, but we've still got quite an active and engaged audience still putting questions in. So, Marcus, there's a question here that's coming from Benjamin. Why should I choose the Golden Visa Portugal program instead of other European countries such as Greece, Spain, Ireland? Marcus, could you just summarize a couple of points on what, why that?
Absolutely. I would be very fast in this one. Actually, we should highlight, I believe, 2 main advantages. One is the residency flexibility. In a Portuguese Golden Visa, you actually don't need to move to Portugal. You don't need to live there. You just need to go there for 14 days every 2 years. So in average, it's 7 years per year of visiting Portugal, which is a phenomenal problem that you have to solve. You have to spend 7 days in the paradise. So this is one very important advantage, especially for the ones that are looking for the global mobility. A plan B, don't want to decide whether to move now or not. Just want to have an option for relocation in the future. Say again?
Yeah, have 1 foot in, 1 foot out while they work out where they want to be.
Yes. And the second, let's say, big advantage, it's because the path to the residence, that the permanent residence or the citizenship takes only 5 years. And now with the change that Luis explained, it's even better because you don't need to actually wait for the submission to be approved. Once you apply for the Golden Visa, the clock starts ticking. So it's important for mention that 5 years, it's really a small period compared to the other countries' programs. For instance, sometimes they don't offer.
Sorry, Marcus, you've gone on to mute somehow. You could come off mute. I think we'll come back to you, Marcus, because I just want to take one last question. We've got a question from Jamie Andrews, who's already living in the Algarve and in 3 years into his NHR tax data, and it says has about 1.4 million to play with. And he's asking, how would David suggest we protect that against progressive tax rates of up to 48% after their 10-year qualifying period for NHR finishes? what case studies or illustrations do you have in terms of examples? So I could pay no more than 5 or 10% for the next 10 years, for instance. I know you can't answer the specifics because it's, but maybe you can just give us, you know, a little bit of information.
Let's say, going back to really what we just chatted through a little bit earlier on tax rates and that you are taxed against the policy growth on the amount of money that you are taking out, and let's call it as income or by capital withdrawal. So we've got some, so I've got a number of case studies that we can distribute. For Jamie's example here, we fundamentally take the figure that you have to invest. In this instance, you mentioned 1.4 million euros. We work out the how it's worked out is the growth that has been achieved by the investment over the period, and the that it has. So in this case, he takes out 100,000. We put it on the post here, and the value by now is just over 2 million. We work out the amount of growth that's been has been attained over that period, multiply that by the amount of income that he's taken, and then that will produce us an overall figure. If that money has been in under 4 years, the equivalent rate is, let's say, 28% on the growth amount. If after year 5, it's 22.4%. And after year 8, actually, it comes down to 11.2% on the growth element that's been taken out. So if you under that very broad circumstance, and I say I'm using this very much, this is almost back of fag packet things for Jamie here. If you were to do that based on the calculation that we did after year 8, you'd be paying tax at about 3,600 euros on a withdrawal of 100,000. But everything is different. I qualify that is that's sort of very much off the top or back of fag packet things. But again, we can give examples and specific examples on those elements. But we put it on here on the chat, so that somebody can then give.
So in real terms, you know, it's achievable, but it's very much relative to people's personal circumstances. So they need to sit down. Because people's lives aren't complicated these days. Most people have been through a couple of marriages, you know, they've moved about. It's so different these days. You've got to seek that advice. No one fits all.
And just to say on these things, these examples and the situation, we have done a lot of work with tax practitioners, accountants, where we have worked alongside with clients so that they can see the joined up holistic nature of what they're doing. It's not standalone, but it's to work within their framework. And as you say, Paul, everyone's situation is different. They need to tie it in with their pension situation. There are a number of things one can do with pensions if someone's already in NHR, and we come across various circumstances like that. So again, more than happy to go through all of those things. I would always say with all of these things, if it looks too good to be true, it generally is, but actually good planning and wise planning is, and taking sound, professional, regulated advice is a great starting point.
Thank you, David. So I'm going to wrap up now because we're well over our time limit. You know, we've still got a lot of people on. And we haven't answered every question, but as I promised, we will go back to all the questions if we haven't answered them in the chat already. I'd just like the panel just to go around the room and just give your sort of key takeaway for the audience, you know, something for the audience to remember in relation to whether it's investing, golden visas, NHR, you know, planning, post NHR. Marcus, do you want to go first? Hopefully you can come off of the...
Yeah. Thanks, Paul. I would say check with your advisor, make sure that you have the plan. I believe this is a nice wrap up. And
of course, make the decision, drink a nice glass of wine. Join us for Invest with Purpose.
Very good. Very good. Very good. Louise. So I'll go to Chris. Oh, you're back. You're there. You're there, Louise.
I'm here. Well, I just say that this is a truly wonderful country. So it's worth living here. It's a really good program. I think there are a number of good investment options that you can choose, and so it's really something very positive, and you'll be helping the country with that initiative too. So it all works together.
Perfect. David?
I think Luis said and Marcus and Luis both said very wise things there. I think that I would 100% agree with you. And someone who lives here as well, I would only agree with what they say. But the main thing is once you do start getting anywhere, and you're going to go there, get yourself structured properly and think about what you're doing. It's really simple to do. It's relatively simple to do, but just take good advice and don't always believe what you hear down the pub or in the wine bar when you're drinking some of Marcus's wine.
Yeah. And I took your point earlier that thinking like you're Portuguese and that don't think like you're still in America, UK, wherever.
Yeah, very much so. Key thing.
Yeah, very much. Chris, I'd just like to leave with an investor's hat on. If you can finish with anything you'd like to just leave the audience with.
Yeah, I think what I'd like to leave the audience with on the investment wise is very much, look at the opportunities that are available in Portugal. We've had two guys on here talking about some of their funds and their opportunities. There's some really good investment opportunities in Portugal. Which will help. They'll help you get your visas if you want them to, but they stack up as investment opportunities. They aren't just to get your visa. And make sure you take advice. That's the key bit.
Thank you, Chris. Well, thank you, panel. And thank you to our audience for putting in your questions. And I know we probably threw a few wide ones that come at you from a wide angle. But it was a great opportunity to engage with the audience, and the audience have also been, very active in the chat. So there is a watch back recording of this, which will come out in the next 24 hours, and we will come back to all the questions. So it just leaves me to thank you, panel, and thank you to the audience. Up on screen is our next webinars that are coming up. One at the end of January deals specifically with mitigating that tax burden under NHR. And then we've got another webinar around golden and cultural visas on the 13th of February. Thanks, everyone, and have a good rest of your day.